Good morning. It is Thursday, May 28, 2026. This is your deep dive daily briefing. I am your anchor, delivering a comprehensive analysis of the pivotal events that have defined the last 24 hours. We begin our broadcast on the world stage, where the strategic and military posturing surrounding the Middle East conflict has taken a highly calculated turn. While back-channel diplomatic efforts continue to fluctuate, a major Western power is aggressively accelerating its defense capabilities to monitor and deter expanding threat vectors. In Ottawa, the Government of Canada announced it has officially selected Saab of Sweden as the preferred supplier for its airborne early warning and control capability. Under this initiative, led by the nation's Defence Investment Agency, the Royal Canadian Air Force intends to deploy advanced global eye surveillance platforms built on Canadian-manufactured Bombardier Global 6500 aircraft. This multi-billion-dollar strategic development is designed to significantly improve operational reach and situational awareness across remote theaters, including the Arctic, reinforcing North American security architecture at a moment when regional flashpoints are threatening to permanently disrupt traditional international borders.
Transitioning from continental security alignments to the broader global economy, the structural reality of the maritime crisis in the Persian Gulf is forcing international policymakers to confront an unprecedented supply deficit. In a landmark address delivered at the Bank of Japan Institute for Monetary and Economic Studies Conference in Tokyo, Dallas Federal Reserve President Lori Logan revealed that the ongoing closure of the Strait of Hormuz has reduced global oil supplies by nearly 13 million barrels per day, representing more than 10% of total world capacity. Logan warned that while domestic inventory drawdowns and increased exports from the United States have temporarily insulated markets, these buffers are inherently finite. With energy executives reporting virtually no scope to expand oil production outside the Persian Gulf in the near term, the international community faces a stark economic ultimatum. If commercial shipping through the choke point does not rapidly return to pre-war baselines, global energy consumption will be forced to contract, layout out a severe stagflationary drag for major industrial economies.
This sobering macroeconomic backdrop is triggering a powerful split across international capital markets, where energy anxieties are colliding with an insatiable appetite for advanced digital infrastructure. On Wall Street, major equity benchmarks rallied to historic highs on Wednesday, propelled by a blistering surge in semiconductor hardware providers. The market optimism was fueled by a dramatic 5% collapse in world oil prices following reports that secret diplomatic channels may yield a reopening of the Strait of Hormuz within a month, providing a temporary sigh of relief for global credit markets. This peace speculation triggered an unprecedented rally in the memory chip market, with computing giants like Micron Technology gaining up to 9% ahead of the opening bell as financial institutions aggressively raised corporate price targets. This capital concentration highlights a deeper structural reality in 2026, where the relentless expansion of artificial intelligence data centers is driving massive export growth and equity valuation booms across East Asia, establishing the tech hardware supply chain as a primary buffer against broader geopolitical instability.
Turning our attention to the technology sector itself, the societal and operational impact of this rapid digital expansion is generating a complex human deficit within the global workforce. According to the inaugural Human Connection Workplace Index released on Wednesday by enterprise AI platform Workday, the aggressive deployment of artificial intelligence tools is successfully reducing worker burnout and boosting productivity, with 86% of global employees reporting efficiency gains. However, this automation supercycle is simultaneously accelerating an acute corporate isolation crisis. The comprehensive study reveals that 14% of the global workforce has taken time off over the past year due to severe workplace loneliness, a phenomenon that is 12 times more pronounced among Generation Z professionals compared to older generations. As younger workers report that interacting with automated systems feels more socially frictionless than communicating with human colleagues, technology leaders are being forced to treat human connection as core infrastructure, dedicating significant capital to prosocial software and microgrants to prevent a total fragmentation of workplace culture.
Finally, we look at the logistics and supply chain networks that serve as the vital arteries of global commerce, which are now seeking long-term venture capital solutions to institutionalize resilience against state-level trade weaponization. In a major corporate development, TMV Logistics officially launched a $200 million maritime and logistics fund, backed by prominent anchor institutional investors including the American Bureau of Shipping and Prologis Ventures. This specialized vehicle is designed to systematically fund commercial software and hardware innovations across 5 core technological pillars, specifically targeting industrial-grade vehicle autonomy, verticalized warehouse robotics, and operational AI for real-time freight orchestration. By aggressively redirecting capital toward dual-use maritime technologies and next-generation alternative fuels, the global logistics industry is finalizing its transition away from the fragile, low-cost frameworks of the previous decade, acknowledging that navigating a permanently disrupted trading map requires a sophisticated baseline of digital self-sufficiency.
In summary, the global landscape is defined by Canada selecting Saab for an advanced airborne surveillance initiative, while the Federal Reserve warns that the Strait of Hormuz closure has erased 10% of global oil supply. Financial markets have surged to record highs on chip strength and speculation of a one-month reopening window, occurring just as global technology research flags a severe human connection deficit from rapid AI adoption, and the logistics sector launches a $200 million fund to secure autonomous maritime infrastructure. Based on the current data, I predict that the 5% drop in oil prices and the concurrent stock market rally witnessed over the last 24 hours will prove to be a short-lived reaction to diplomatic speculation. While the market has aggressively priced in optimism surrounding a potential one-month reopening of the Strait of Hormuz, the underlying reality highlighted by the Federal Reserve remains mathematically uncompromising. Global energy inventories are depleting rapidly, and there is zero spare capacity outside the Persian Gulf to replace a prolonged 13 million barrel per day deficit. Consequently, if a binding memorandum of understanding is not signed within the next fortnight, reality will catch up to capital markets, triggering a sharp resurgence in crude volatility. This structural friction ensures that the Federal Reserve will maintain a highly restrictive policy stance, utilizing hot core inflation numbers to justify keeping interest rates higher for longer through the remainder of 2026.